Hello and welcome to Your Property Empire. I'm Chris Gray. Over this holiday break, I'm going to be interviewing some property specialists that I've met through a global group called the Entrepreneurs Organisation, or EO for short. Now, members of EO are typically forward-thinking entrepreneurs that have fast-growing businesses and are often breaking the boundaries of most people's thinking. Now, tonight we've got a special show where we take a look at investing in the UK and investing in serviced apartments. So some of the questions I'll be asking is, what are serviced apartments and how do they differ from normal investment property? How is the UK property market serviced apartments and how does it compare to Australia? And how can you get into new areas of property investing, and what are some of the risks and rewards that you need to be aware of? Now, joining me tonight is Derek Gallimore, a personal investor and CEO of Citymark, a London-based serviced apartment company, which is on target to have 1,000 apartments by 2016. So, welcome to the show, Derek. Thanks for joining us.
Thanks, Chris.
Tell us about how you got started in property investing.
Sure. So I started at a young age of 24. I was in the UK and purchased my first investment property, which was a 3-bedroom terrace house in West London. I started in the tail end of the boom, and quickly, within about 6 months, I was able to purchase my second property. Within about 5 years, I had then bought around about 17, 18 properties, done about 8 developments, sold about 3 properties, and then...
And was this a full-time gig for you, or just a part-time hobby while you were working?
I was actually working full-time at the time, so it was... I had a lot of flexibility with my job, luckily, but it was a very frenzied period for property, and you know, I'd literally see prices going up by 20, 30,000 every week, so it was quite an excitable time.
And so you just started making money and thinking, well, I'll just keep on doing what I'm doing.
Yeah, the market over there was very exciting. You could, my philosophy was basically to invest, buy properties, add value to them, refinance, and remove the money, and then invest again. And it was quite a high risk strategy. It was highly leveraged, but the rental yields and the returns are fairly good, so it was always a cash flow positive.
Yeah, because that's the difference with the UK and Australia. A lot of the properties are positive cash flow, aren't they?
Correct, yeah. It's historically the interest rates are lower than the Australian interest rates, and the rental yields are slightly higher than the Australian rental yields. So it reverses the cash flow situation, where effectively it's generally a positive cash flow game.
And so really your property investing strategy is kind of similar to mine, so it's really basically long-term hold, don't bother selling because you pay too much cost, and just refinance the equity out and keep repeating.
Absolutely. I was able to, for every project, I was able to get a lot of cash out and then reinvest that cash. There was no realisation of value, so there was no tax to be paid, and you could start again.
Okay, and so remind me again, how many properties, or how big was the portfolio in the peak time?
At the peak, I mean, I created a lot of properties. It's quite common in the UK to split properties, buy a big house and then split it into 2 or 3. At the peak, there was about 17 properties. I sold about 3 properties. So I ended up with about 14 properties.
Okay, and GFC, obviously London got a bit hit harder, or the UK got hit harder than Australia. How did that affect you?
Yeah, the GFC was interesting for me. It was, I remember it very clearly in September, October 2007. I had just purchased my biggest property to date. It was about 8 apartments in a block, and that month Northern Rock collapsed. The UK economy collapsed, and it was a very different scene very quickly after that. But luckily I was very secure, although I had high leverage. Luckily the interest rates dropped through the floor, so I went from a relatively cash flow positive or cash flow neutral to very cash flow positive very quickly. So that actually saved the day, really.
And we'll actually pull up some of the charts. I think the first one we've got was interest rates, to compare that from the UK to Australia.
Yeah, absolutely. We've got a comparative interest rate chart here where it's the comparison between the UK and the Australian property market is actually very similar, and these charts, although it's a different scale, show that effectively the interest rates are relatively tracking each other, although if you excuse the scale, there's basically a slight margin between the UK and Australian interest rate.
Yeah, so in the black we've got, is that the UK, and in the red Australia?
Correct.
Yep.
And the scale is slightly different, but the UK interest rate is generally lower, tracking lower than the Australian.
Right, okay, and then we'll just pull up the second graph, which is the housing index. Yeah, so what does that show us?
Yeah, so interestingly, the interest rate is generally lower, the yield is generally higher, creating a cash flow positive, but in terms of the capital growth you would think that would be compromised or tracking differently, but effectively from that model you've got the same capital growth in the two markets generally, apart from the last sort of 5 years where it's gone a little bit crazy.
Yep, good. So look, we'll just jump to a break now, but after the break we're going to be talking more about the service departments and some of the differences between Australia and the UK in case you're investing there. We'll be back soon.
For those who need their car every day, we automatically provide unlimited days of car hire while we repair your car with GIO Platinum Car Insurance. GIO, it's a trust thing.
The all-new Isuzu MU-X. It's got everything you're looking for in a 7-seat SUV. Plus, the MU-X factor. The all-new Isuzu MU-X. Ready when you are.
Welcome back to Your Property Empire. Now, investing in property can be a lonely business at times, especially if you're contrarian and going against the grain of most wage-earning employees. So what kind of things do you learn from, I guess, getting out there in organisations like EO to try and kind of keep you on track?
Yeah, I'm a member of EO, and it's a fantastic organisation. It offers camaraderie, it offers an environment where you can share your ideas, and it is often quite a challenging and sometimes lonely existence, being a contrarian, as you say. So EO provides a fantastic environment for that. Because
the whole idea of the learning is say in Sydney there's maybe 120 members, and there's branches in kind of Adelaide and Melbourne as well for the rest of the viewers around the country, is that you're in a small group of about 8 or 10 people with non-competing businesses. So you can say, look, I'm in the property business, you share all your secrets, and it doesn't matter because no one's competing with you, and you get ideas from someone in retail or something like that saying, oh, we do something in our industry that's completely different, but you can use those ideas as well.
Absolutely, yeah. Businesses, there's a lot of examples and lessons that you can learn from a whole range of businesses. So to have close contact with so many other founders and entrepreneurs, it's very, very valuable. Yeah.
So you told us a bit about building that portfolio, struggling a bit with the GFC, obviously with the banks. So what are you actually doing with your portfolio now?
Right, so as the crisis hit, it was the world's longest recession, effectively. I couldn't do what I was doing before, which was to refinance and do another development refinance. The banks, I was fine, but the banks had collapsed. There was no money. So I looked into the synergies of service departments and tested it with a couple of apartments, and that worked fantastic. So I found myself out of the downturn, moving into the service department sector.
And so what actually is a service department if someone hasn't come across one?
There's a lot of variation within the industry, but effectively it is using apartments instead of hotels. So there's an apart hotel hybrid, and then there's more pure service department offerings where you know, you've got 2 bedrooms, 2 bathrooms, and to use for accommodation.
So could I have a unit in a building of all other residential buildings that are normal people's homes and say that's a service department, or do I need to be in a block like a hotel and say, well, it's all centrally managed?
It's a little bit controversial. It's all got to be done 100% legally, obviously. It's all got to be within the regulations and the planning laws.
So it's actually regulated, so you can't just turn it into a service department overnight?
Absolutely, absolutely. It's got to be done properly. We use through CityMark, we use just regulated apartments, and we tend to use entire buildings and work directly with corporate landlords.
Okay, because what's the issue there? Is there just more OH&S or something like that?
It's while it's using residential property, it is actually it's a fantastic hybrid, but you're moving into hospitality, so you've got to obviously provide care for the guest. You've got to ensure that the guest is safe and the standards are maintained, and of course that the guest has a fantastic time while staying in the accommodation.
Okay, and so I guess what are then some of the pros and cons of it versus, say, getting your normal two-bedroom apartment, renting it out on a 12-month lease? Why would I typically turn it into a service apartment? Sure.
The service apartment industry is, to me, fantastic. It's like residential property investment on steroids. It's effectively the commercialisation of residential property. So the property is a planning hybrid, but it is underpinned by residential values and residential yield. So it's a superior asset utilisation of what is effectively a residential property.
Okay, and we've got a graph again that we'll pull up, which is more talking about the size of the market. So tell us a bit about the size of the market for, say, UK and Australia.
Sure. So CityMark operates within London. London is obviously a massive destination for both tourism and business, yet it's quite an immature market for the service apartment market. We can see here that London down there in the bottom right with the index has only 1.2 units compared to Sydney, which has 2.6 units, and New York, which is up there with 5.2 units. So that chart is really, and that chart's from Savills, that chart is really showing the immaturity of the London market and the scope for London to grow in its serviced apartment provision.
So that means for an entrepreneur like you, then you think, well, that's a massive growth market that's got the potential for the US and Hong Kong, and you want to be in on the ground.
Absolutely. There's so much burgeoning potential in the London market. There's so much investment coming into the London market, and again, it's underpinned by the excitement of the property residential market. So it's a win-win. But Sydney should be happy. It's already a very mature market, and there's people like Quest Apartments here who are doing it very professionally, and it's a fantastic market to mimic and repeat.
Okay, and so if someone, say, wants to get into, say, the Sydney market doing this kind of thing, or Melbourne or wherever else around Australia, is there a perfect time to try and pick it? Does it flow with the rest of the property market out there? Because obviously the main property market's moving at the moment.
Again, it's the combination of the property market, but it's also the movement of the service apartment sector, I think, is gathering pace. People are realising that there's other options other than hotels. It's the democratisation of accommodation. People have other options, and while tourism is growing, we're also grabbing market share from the hotels, where they're offering a very generic and homogenised product. So there's different options out there.
And so is there a danger then at the same time that if it's a very specialised market, that say if terrorism goes up and tourism goes down and exchange rates and things like that, that suddenly a market could be wiped out overnight, or is it still generally going to be growing?
Sure. We find that the service apartment market is far more resilient than the hotel market. It's actually a more cost-effective means of accommodation, so it's less discretionary. It suits business people perfectly. It suits the corporates that are paying for it perfectly. So it's actually more resilient than the hotel and tourism market we're finding.
Yeah. And so where do people go to look for these service departments? Is it on the normal domain and realestate.com, or is it more of a specialised commercial area?
You would seek out service apartments as you would hotels. So we have a service apartment offering the same as a hotel. You can stay from minimum of 1 to 2 nights up to 90 nights. We're the shorter time frame. You can look on all of the travel sites. We're listed on all the travel sites, and of course we have our own website, citymark.com.
Okay, that sounds good. Well, time now for a quick break, but we'll be back soon.
Harvey Norman half-yearly clearance on now. DeLonghi Premium Fully Automatic Coffee Machine. From bean to cup, just one touch for the perfect coffee. Now, only $12.98 with bonus $100 FPOS cash card. Plus, enter for your chance to win your purchase price back. 10 prizes to be won. Come in, meet our baristas, get a great deal. Premium DeLonghi Automatic Coffee Machine, just $12.98 plus bonus $100 FPOS cash card. Get yours now at Harvey Norman.
You can have confidence in me.
If you thought the colour and movement of politics was going to die down in 2014, think again.
Hasn't this been fun?
The makeup of this place is going to keep things interesting. Labor and the Greens will make things difficult for the Abbott legislative agenda.
We are not going to give them a blank cheque.
Not the time.
And beyond July 1, the colourful crossbench will have to be managed.
I can do so much more.
Join me for the 1 hour AM agenda.
Judge us by our performance.
Massive breach of trust.
8:30 weekdays here on Sky News.
Welcome back to the show. Now, we're talking tonight about investing in the UK and in Australia, looking at serviced apartments and the mix with hotels. So, Derek, tell us a bit more about this kind of integration with hotels and kind of how it works for you guys.
Sure. So we offer effectively hotel services within apartments. Okay, so there's a lot more flexibility of accommodation for our guests, both corporate and leisure. People can stay anywhere from 1 night to 9 months, but it suits a broader range of people. So it suits families, it suits couples travelling together. The space is far more flexible than hotel accommodation, and you can entertain people in the space, you can cook, all of the normal activities of daily life.
And so have you gone from having more a personal investing kind of hobby type business while being an employee to then having a full-on business? So are you trying to then buy whole apartment blocks, turn it into a serviced apartments, then sell them off and then manage the whole process?
Absolutely. We are a hospitality company now. We're providing hospitality and accommodation to corporate and leisure. The property play, which is very interesting to me, is the fact that we're able to secure buildings, we're able to offer higher yields based on effectively a commercial activity, and offer funders and investors a very guaranteed yield, full tenancy for the period of the lease, and a very good product.
And so how many apartments would typically be in one of these buildings?
Sure. So it varies. In the UK, it's in London. It's actually quite fractured, and the ability to get an apartment of a block of 100 is quite limited. So we deal in smaller apartment blocks of 15 to 30 to 50.
Okay, but that's still a reasonable size. So from going and buying single apartments to then buying blocks of 50 units, how do you get the mindset for that? Like, how do you suddenly jump and get into big scale business?
Absolutely. We have a model where effectively we have the funding, external funding, but we are effectively providing them with an ideal tenancy solution. So they are buying a prime central London asset, and we are in partnership with them, and we manage the property, offering them effectively a slight premium on the residential yield. So it's a win-win for both parties.
Yeah. And so does that really just come from you understanding your own investing strategy? Say, look, this works, I've bought 14 to 15 properties, works for me, why not just kind of supersize it and do it for friends and family and build other people, and then just take out whole blocks?
Absolutely. We've been in, Citymark has been trading now for nearly 5 years. We have 150 apartments, and our business model is very solid. We know our yields, we know our returns, and we have a very comfortable profit margin. So it's just about scaling up now, and 2016, the end of 2016, we aim to have 1,000 apartments within central London.
That's certainly quite a few apartments.
That's a good business size. Yeah.
So I guess for the investors out there, what you're really trying to say is, look, you've got your normal residential, now you've got serviced apartments, you're going to get some slightly better yields. but you don't have to spend $100 million doing it. You can still buy apartments for a few $100,000 or whatever the cost is, but you've got, in a way, the cookie cutter kind of process all sorted out, so they're not suddenly taking that risk. So even if they haven't got that much knowledge on it, they can get a piece of that market without kind of taking off too much.
Absolutely. There's a model in Australia where effectively the apart hotel model, where a building is created, purpose-built service apartment building, and then the individual apartments are sold to individual investors. It's a comfortable model because people know residential properties, people know apartments, and this hybrid model allows people to invest in apartments, yet it's underpinned by a commercial activity. So it's very easy to capture the enthusiasm of investors.
Oh, good. Now, you mentioned the legalities before. How do investors know they're doing the right thing? So it's obviously, you're moving on, you're getting into more of a commercial arrangement. How do you know the company's doing the right thing?
Sure. The building has to comply. It is a different planning use class, so the building has to comply with the appropriate use class in whatever country we're in.
So like for fire exits and all that kind of stuff.
That's right.
Yep.
So it has to effectively be a hotel building, but there is interchangeability with the planning laws, pending planning applications to move blocks between the two uses.
Okay, and if viewers are looking to get into these kind of markets, can they do it just like they buy the residential? So can you just go to your bank and say, look, I want to buy a service apartment, I want to get a valuation, I want to get a building inspection on it? Is it literally that simple? And can you get out whenever you want to as well?
Sure. I'm not so familiar on the Australia market, but it's certainly that there's finance opportunities there, and again it's an asset class that's underpinned by residential property effectively and commensurate yields. The yields carry a slight premium, but there's a few unknowns to lenders, so I would imagine that lenders are generally happy, but they see it more as a commercial exercise, so the LTVs would be slightly less.
Okay, now to help the viewers, you've got some information you put together, and I think we'll put the strap on the screen of citymark.com/Sky. Can you tell us kind of what information is in there and who's it going to help?
Sure. So, I mean, if you are interested in either UK property market, UK property investment, service apartment investment generally, do go to citymark.com/Sky, and we have some fantastic information there for you.
Yep. And would you say this is a thing that typically any investor could do, and that they put a portion of their portfolio into these kind of things just to diversify away?
I think it's a fantastic way of diversifying a portfolio. It's probably not for your initial property purchase, but it's really a fantastic investment strategy, and certainly something that most people should consider for their portfolio.
Yeah. And any kind of warnings out there, any things to be aware of, no matter where they're doing it in the world? Are there some key things to be aware of?
Yeah, I mean, I would also encourage investing in the UK market, but it's because of the advantage of the market. But you've got to be aware of the differences, such as the currency changes, but also just be aware of the planning uses primarily.
Sure, sounds good. Well, thanks a lot for joining us. Thanks for sharing your story, and hopefully some of the viewers can get some more information from the website as well.
Absolutely.
Wonderful. Well, thanks for joining us this evening, and I hope you've really enjoyed the special show on UK property and also serviced apartments. So over the next few weeks, we're going to be sharing some more entrepreneurs that I've met through the Entrepreneurs Organisation. They'll be sharing their stories and hopefully giving you a few insights into some different types of property investing. Anyway, glad you enjoyed it. Until next week, I'm Chris Gray. Good night.